Hey, so I received my first two pieces of tax information today and I started organizing for tax prep time. And I realized that my baby girl turned 3 months old today. You're probably saying, Matt, what does that have to do with taxes? Well, being a father has been the most rewarding experience of my life, hands down. However, your kids can also reward you by helping you save money on taxes. And I wanted to share with you 4 of those ways today that your kids can be used to lower your taxes. The first way is through the exemption. Each child that you have provides a $4,000 tax exemption. So this means that if you have 2 kids, that's $8,000 in tax exemption, which reduces your taxable income at your marginal tax bracket. So if you're in the 34% tax bracket, each child saves you $1,360 per year in taxes. Pretty good, right? Now the second way for some people is that there's a child tax credit of $1,000 per child for each child under the age of 17. Now this credit doesn't apply to everybody and it starts to phase out for those with incomes of $110,000 to $150,000 for married couples. But it's another way to potentially reduce your taxes. Now the third way that I really like is shifting your earned income to your kids' lower tax brackets. Now how do you do this? Well, it doesn't work for everybody, but it can really work well for business owners potentially. Now what you would do is you could hire your kids. They could work around your office, they could help you market, they could help you do stuff on your website, they could be a model for your website. I don't know what it is, but you could hire them as an independent contractor or as an employee. Imagine having 2 kids and paying them $10,000. That's $20,000 that would otherwise have been your income, taxed at 34%, meaning that would have cost you $6,800 in taxes. Now, if you hire your kids and pay them $10,000 each, the first $6,200 of earnings for each of your kids doesn't have any taxes. So by hiring your children, you could reduce your family share of taxes by over $6,000 per year. Now an added benefit, and what I really like, is once your kids have earned income, they can actually contribute to a Roth IRA, or you could contribute to a Roth IRA on their behalf. And imagine that money growing tax-free, compounded for the next 5 or 6 or 7 decades. We're talking major potential bucks, and starting your kids off with some good savings and investing habits at a young age. Now the fourth way that I want to share with you is that if you have childcare expenses for your kids 13 years or younger, you can potentially get a tax deduction from 20 to 35% of those expenses up to $6,000. This means that you could save up to $1,200 per year in additional taxes on expenses that you are already incurring on your children's childcare. So there you have it, 4 ways that you can use your kids to lower your taxes. So it will pay. If you see that your income is starting to grow and your tax bill is going higher, it could make sense to really do some tax planning to use your existing expenses and your kids to lower your overall and family share of their taxes. Thank you for listening. I hope you continue to plan for your taxes in a financially intelligent way. Talk to you soon.